Okay, let's get started. Good morning, everyone, and welcome to today's Tuesday Market Outlook webinar. My name is Prakash Vijayanath. I'm a senior analyst here at OptionsPlay, and today I'm going to be walking you through my thoughts and analysis on the current market. So before we get started, just a quick disclaimer. The types of securities, forms, and research tools used in this video are for demonstration purposes only and should not be considered a recommendation by OptionsPlay or a solicitation or an offer to buy or sell any securities. This video is not intended to be used for individual tax, legal, or investment planning advice. Our agenda for today, kicking off with the major equity indices, highlighting some of those key levels. From there, we'll be moving on to fixed income and commodities. We'll take a look at the sector rotational model as well, highlighting which sectors are outperforming and underperforming the overall market. Take a look at some subsectors of interest that I have for you today. And we'll end today's webinar with some bullish and bearish market observations. So starting off here with the S&P 500. First of all, heading into this week, it's a pretty big week for equities across the board. Firstly, we have inflation data coming out tomorrow. And of course, earnings season is kicking off on Thursday with some of the major banks starting to announce their earnings and their forward guidance as well. So that will be closely watched. Usually the two big events of earnings season are big bank earnings and big tech earnings. So those 2 weeks, big tech earnings still a couple of weeks away, but those are the higher volatility events for the major indices. So if we take a look here at the S&P 500, we have seen some neutral price action with price at around this 444, let's say 444 level, running into some resistance and really turning a bit more neutral after what has been a very strong breakout. Momentum has declined from those levels. It was at an overbought condition and it has now returned to more modest levels. However, price still remains a little bit elevated. So that is a good sign. I mean, this indicates for me that the neutral price action is more of profit taking as opposed to risk aversion. So especially heading into earnings, you usually tend to see this type of price action a bit more neutral. And once the first few earnings announcements are done, we tend to see a bit more life in markets. But yeah, for the S&P 500, I would still maintain my longer-term bullish thesis, especially after the breakout above this 420 level. However, if we do, for any reason, get a steeper pullback, 420 would be a key area of support that I'd be looking at, and it will also be a good buying opportunity to the upside. When I look at things from a macro perspective, the economic climate is still very positive for the US. Consumer spending is strong despite higher interest rates, which is, it's a bit of a sweet spot. So equities are reacting to that very nicely. Also, labor inflation, which has been a huge, component of inflation. It's really been the components that the Fed have been worried about regarding inflation. Labor inflation has slowed down despite, obviously with higher interest rates, but despite the fact that consumer spending is still increased or is still staying at very strong levels. So the US economy is in a bit of a sweet spot right now. I'm not saying that it's all upside from here. At the end of the day, we still have some concerns with a recession next year that could act as a headwind. Also, Chinese data is coming out very weak, and China being the second largest economy in the world, well, that's going to have a negative impact on global demand. So those are the types of things that we are looking at, and those are the types of things that are impacting markets in conjunction with interest rates. And speaking of interest rates, next month will be not next month, it's the 27th of July or 26th of July will be the next Fed meeting. And we are expecting a 25-point hike. This has been priced in, and it's been priced in for quite some time. So I don't expect that meeting to have too much of an impact. Again, Fed Chair Jerome Powell's speech is going to be a high impact news event. And as well as it's really going to be July data, well, inflation data tomorrow, and then July data regarding jobs, regarding, again, inflation in August. So that is going to be the next, key macro indicators that we are looking at. All in all, S&P still positive. We have major resistance at around 450 level, nice upside targets. However, I am still expecting maybe, a bit more consolidation at this area, maybe break down lower to 420 at the most, but 450 would be the next major resistance level. Okay, moving on to the NASDAQ 100, looking at the QQQ ETF, we have price at a major area of resistance on the weekly time frame at around 370. So, it is definitely overextended. You can see momentum reached an overbought condition on a weekly time frame and has since started to decline from that. Also, with price reacting to this major resistance level, we have seen that slowdown in momentum. However, we are not seeing a rejection of this area. We're seeing maybe minor rejections on a day-to-day basis, but we're not seeing a strong reversal from that area, which is a very strong sign for the NASDAQ 100. Despite the fact that momentum is declining, price is remaining elevated at that level. So that does signal a potential breakout rather than a breakdown. And the next key areas that we'll be looking at are really all-time highs, just shy of 410. So NASDAQ 100 performing very well. Big tech very much providing leadership to the overall markets. And yep, that is what we are seeing here with the NASDAQ 100. So in terms of downside levels, where could price potentially pull back to? Keep in mind, price is still above its 21-day exponential moving average, and it has been for a very long time. So it is still a little bit overbought, in my opinion. So I would like to see maybe a bit more of a pullback for a much better bullish entry point. And if we do get a pullback, I'll be looking at around a 350 to 355 area for that pullback for the NASDAQ 100. All right, moving on to IWM, which is the Russell 2000 ETF. So we're looking at small caps here, and very interesting price action this morning. So price is at a major resistance level at 188. This is also the 38.2 fib level. So, and it has actually acted as major resistance for over a year now. So with price at this level set to open a little bit higher, we could see a potential breakout and a continuation higher. However, because this is a major resistance level, I'd like to see additional confirmation. What I'd be looking for is a breakout, a close above 188, and really, if I'm really safe, wait for a pullback and a retest before the ideal bullish opportunity here for the Russell 2000. Russell 2000, small caps in general, they've definitely shown some signs of outperforming the large cap names for short periods of time over the last few months. But overall, I think large caps like mega cap names have really been outperforming. So yeah, when it comes to small caps, you want to see further outperformance to warrant targeting small caps as opposed to large caps. Next key areas of resistance would be at around 200 and of course 210. The 23.6 fib level, major resistance level as well. So those will be the two upside targets if price can break above the 38.2 fib level. Moving on to TLT, which is the Treasury Bond ETF. So major support at 100, price is breaking below that, definitely showing signs of very weak momentum, but also very close to approaching an oversold condition. We're also seeing price open up a little bit higher. So once again, this area acting as support, and we could see a continuation higher. However, the overall trend here in the last few months is still bearish. I've always highlighted the 108 level to be the key area to be looking at. However, I'm starting to change that view. I think 104 is the next key area to be looking at. I mean, the price is struggling to break above 104. There's just not enough momentum to see price run into 108, which would have been a much better shorting position. But with TLT, you even see the big impulse move that happened in the last few days to get it back down to 100. So I'd be looking for, revisit back to 104 and for much better risk to reward shorting opportunities as opposed to waiting for 108, which, I think we might be waiting for quite some time. Okay, moving on to the US dollar. So the US dollar index, DXY, we were seeing a lot of consolidation, very tricky trading conditions here for currencies. Price was squeezing in, and it was squeezing ahead of last week Friday's jobs data. The jobs data did prove to be a downside catalyst. So we've seen since then, price actually, very big bearish candle there, and followed by a breakdown of this ascending trend. So this does indicate a continuation back down towards 101. So very, not too far to move back down to 101. But the US dollar is definitely on the back foot, especially with a more dovish Fed. We've also heard some comments from Fed officials that are, that have basically said this could potentially be the end of, we are looking closer and closer towards the end of this interest rate hiking cycle. So they do see the light at the end of the tunnel, which is good news for equities, but for the US dollar, that is going to act as a bit of a headwind. And that's okay. I mean, we have 101 major support. If price breaks below that, there's quite a lot of room to the downside. I would say price would probably form another support level before that. But for now, tone is definitely bearish for the US dollar. Moving on to gold. So looking at the GLD ETF. So gold, the two things you need to know again about gold are, one, it moves inversely to the US dollar in the short term. And two, it is a safe haven. So we tend to see investors rotate towards gold when, during a risk-off environment where there's a bit more risk, and gold does act as a nice safe haven. However, more recently, after what was a very strong upward move off the back of the banking turmoil, among other things, we saw price actually form a bit of a triple top here. I may have cut this a little bit short, but price did form a triple top on a weekly time frame at 190. And after a lot of consolidation, it has been moving lower. That being said, that move lower has been incredibly choppy, as you can see with the price action. It's been very much big move, a lot of consolidation, and another big move. So price is at 180, a previous area of minor support, now turning resistance. Let's see if we can hold that level, because if we see some bearish price action there, I would be looking for potential shorting opportunities in gold. Despite the inverse correlation to the US dollar, I don't think the US dollar has that much room to the downside. And we are also in a risk on sentiment, which is why we have been seeing this steady rotation out of gold. So for gold, look for bearish price action at around 180. And, if we get that, it's the ideal risk to reward downside opportunity for around 170 support. Again, I would say patience would be required for this trade because it has been incredibly choppy. Moving on to oil, looking at light crude oil futures. So a lot of consolidation. We've spoken about this, and I feel like I am repeating myself over the last every week, really, when I talk about oil. But there has been a lot of consolidation, a very tight range, 74 acting as the new resistance level, and 81 obviously was the other resistance level that we've been looking at. But we also have 68 as a major support level. So we can see prices in a very tight range and respecting these two key levels. Currently, price is back at a 74 level, which does provide an ideal risk to reward bearish opportunity here. So looking for a downside move back to 68. If you are trading oil, or if you're trading energy companies that have high exposure to and high correlation to oil prices, I advise that those trades are very short-term in duration because of this very choppy price action in oil. The price is in a very tight range. So there are opportunities, but they are short-term. Now, if price breaks above 74, that would indicate cutting out losses at a very minimal loss for a potential trade here. So that's why the risk reward does favor the downside at this resistance level. Okay, moving on to sector rotation. 4 sectors in the improving and leading category, and 7 in the lagging and weakening category. So a bit of a shift from last time we spoke, which was actually 2 weeks ago. Last week was 4th of July. So industrials moving from the lagging category into the improving category. So showing a good bit of momentum there. Obviously, there is a lot of industrial or infrastructure investment that is always going to act as a bit of a tailwind for the sector in the long run, but it is still susceptible to short-term fluctuations. In the leading category, we have discretionary, finding a lot of momentum still and improving on the relative strength aspect, which is a positive. We'll be looking at the retail sector as well, which is a subsector that I've had for you today in a couple of slides. Taking a look at the again, in the leading category, we have technology. Technology also finding a lot of momentum and relative strength, and it's been providing leadership for quite some time. So when technology is in the leading category, the major indices tend to move higher despite the other sectors in the lagging category due to the fact that technology names have such a high weighting in the S&P and in the NASDAQ, especially in the NASDAQ. So technology leadership should provide tailwinds for the major indices. In the weakening category, we have communications losing out on relative strength and momentum after being in the leading category for quite some time. We also have financials heading into earnings week with a lot of relative strength momentum and in the improving category. So let's see how financials reacts to earnings, whether it can build on this momentum and continue to provide relative strength moving towards leading category, or if it potentially rotates back into this lagging category. The major banks, despite the banking turmoil earlier this year, are still in a very positive place. It's more the regional banks, so the smaller banks that have been struggling. So that is one thing to say about the financial sector. Energy, still underperforming, finding a little bit of momentum after oil prices did manage to rally last week, but again, I don't think this is sustainable momentum. We have defensive sectors in healthcare, in staples, and utilities, all showing very much weakening signs. This is due to, again, risk on environment. Investors will be rotating it from these defensive sectors into sectors like discretionary and technology that provide a bit more growth potential. So KRE, this was a subsector of interest that I had for you a few weeks ago. And this was a bearish play on KRE. I was looking for, where price currently was a couple of weeks ago at around the 42, 43 level. I was looking for a move lower here from that area back down to 36. Unfortunately, that has not happened. Prices stayed very much neutral. And I think at this stage, it makes sense to close this trade or potential break even or close to break even. So even though it hasn't necessarily invalidated the bearish thesis, price action is still rejecting that 55-day exponential moving average and not really finding a lot of momentum to the upside. The fact that it hasn't really moved that much lower, given the recent time in the last few weeks, that does indicate that it's maybe best to just cut minimal losses or break even on this trade. Okay, taking a look at XRT. So XRT, new idea for today. Really focusing a bit more on the daily time frame for this one. So we have 64 acting as a resistance level, and what we saw yesterday was very bullish price action to see price break above that level with a lot of momentum. So that breakout for me is very encouraging for continuation higher, and we could see price actually continue to rally with plenty of upside. The way I would structure this trade would actually be a bit more of a debit spread. I'd go a bit more aggressive with this, and I'll be taking partial profits at around 68, 60 or close to 68, and I'll let the trade run from there. The next major level of resistance is all the way at around 75. So plenty of room to the upside here for XRT and a very strong breakout with very good momentum. Moving on to an old idea that I have for you today, it's United Health. So United Health, we were bearish on this trade at 480. Price was rejecting that level. Now I saw a bearish opportunity due to the fact that there was a huge impulse move to the downside. Price was oversold. We saw a nice gap fill and a nice retracement higher back to 480 previous support, and that has turned resistance, especially after one or two rejections there. So that provided us with a very good bearish entry point for United Health. And finally, in the last couple of days, it has moved lower with a lot of bearish momentum behind it. So with price currently at 460, I'd be looking at taking partial profits on this trade. That's how I would manage it. Move stops to break even and let the trade run with 450 being my second take profit zone. Okay, taking a look at a new idea, that is AMD, so a semiconductor name. Obviously, a lot of hype with semiconductors. That being said, I've always said the last few weeks, whenever someone's asked me about semiconductors, is wait for the pullback because just momentum was heavily overbought. AMD, okay, wasn't not as overbought as Nvidia, but AMD, the 50-period CCI, which is a blue histogram, it approached nearly 400. I consider 200 to be overbought, and usually we tend to see reversals at around 200. 400, though, is extremely overbought, and since then, thankfully, momentum has declined, and price has declined a little bit, but it's actually declined back to this gap at around 110, and finding some support at that level, and also at the 55-day exponential moving average. In the last 3 days, we've seen 2 rejections or intraday rejections of 110. And that indicates a nice risk-reward bullish entry point here, in my opinion, for continuation higher for a name that is one of the leaders in the semiconductor space. So if you're looking for a name in semiconductors, and if you think NVIDIA is a bit too overbought still, or you're waiting for a bit more of a pullback, AMD does offer a very good risk-reward at current levels, with price trading at 114 and also recently pulling back and with momentum and at more modest levels. So so bullish thesis here for AMD. I'd be targeting 130 as a first take profit zone. But again, for this type of trade, maybe you'd want to let it run a little bit more, see how far it can get. But definitely take partial profits at 130. To the downside, I'm just looking here. Okay, so 110 acting as support. If price breaks below 108, I'd consider cutting losses on this trade and closes below 109, 110 really. Below the swing level really. That's what I'm looking at. If it closes below that, I'd be looking to cut losses on this AMD trade. Moving on to Dollar General. So Dollar General, this is a bullish idea that I had for you a couple of weeks ago with price at where it currently is. And unfortunately, that's the problem with it. It hasn't moved higher. It's actually stayed quite neutral. If you use a credit spread, this may have worked very well in your favor, as a time decay would have made this position profitable. However, in a debit spread, you needed a big move of a certain magnitude, during a very quick time frame. And if you use a debit spread, I definitely think it's time to close this trade for near break even or minimal loss. A credit spread, I still think it's time to close this trade because with a credit spread, we normally look for around 45 days to expiration. And we like to close at 21 days to expiration due to the fact that gamma exposure becomes higher. And then gamma with high gamma means that a small adverse move against you leads to larger losses. So it's not really worth it for a credit spread. I'd also be looking to close that trade. However, that should be at a slight profit if you use the right type of credit spread at around 170. So yeah, Dollar General, very neutral, pretty much a break-even trade. So looking at another bearish idea that I had for you for the last couple of weeks, and that is Southern. So Southern is, we're looking at this area at resistance of 71, 72, and I would say a lot of patience has been required. I did mention that a credit spread was the best trade structure for this, because even though I'm looking for fairly sizable move to the downside at 65, price isn't reversing at 72 that much lower. It's definitely respecting this area as resistance. So our bearish thesis definitely remains intact, but it is not really, it's also finding some support at around 69 and not really finding a lot of bearish momentum. So credit spread would have still worked amazingly well in this environment because of the time decay working in your favor. And, eventually we may get this move, but, if you want to close this trade for a good profit, I think it's not a bad time to do that, or at least maybe taking partial profits. Again, 72 area hasn't been breached, so our bearish thesis remains intact. However, we're just seeing a lot of neutral price action here. Okay, new idea for today again, and that is PayPal. So PayPal, I am seeing a bit of a bullish breakout here. There has been a significant decline for PayPal due to, that was just extremely high valuations when it was trading at 300. And now it's at more modest valuations, so it's not overvalued from that perspective. And we are seeing, a bit of bullish price action in the last few days. So initially, after earnings, a big decline, a bit of a gap down. all the way down to 60 here. And we've seen a recovery, price breaking above its 21 and 55-day exponential moving averages. There was some minor resistance at 69, but we can see prices finding a lot of momentum, especially yesterday, to break above that level. And I think this provides a good bullish opportunity here. 72.50 was a previous resistance level. And, due to the gap down lower and due to 70 here or 69 acting as a resistance level, I don't think that 72.50 would act as a big resistance level. I think there is still room to the upside. But the key level that I am looking at is 77.50. So that has been a more major resistance level, major resistance level. So PayPal looking bullish, and yeah, potential breakout opportunity here. Okay, and finally we have BMY. So BMY was a bearish trade idea when price was at 66. And that was a thesis for the trade was, on the weekly time frame, you can see price has been on a very bearish structure, previous swing levels or areas of support turning resistance. And that happened at 66 as well. And that provided us with a good risk reward bearish entry point targeting 60. So again, I was looking for a credit spread here for BMY because it's not a very volatile name, but price has been declining quite nicely and is now at 62. So, partial profits, yep, I think that would be a good time, and letting the rest of the trade run all the way down to 60. Again, this bearish structure is still very much intact. And yeah, so far, trade that's going very much in our favor. And with that is all I have for you today. Thank you so much for joining me. And I hope you all have a great trading week. I will see you next week for another market outlook. Goodbye, everyone.